Before we even get to Jay Powell, we will get the FOMC minutes. And yes, they're outdated, but they may provide some clarity on where the central bank's head was when they decided to cut rates. What do you expect to learn about Powell's comment on mid-cycle adjustment?
Well, taking the minutes as a whole, I'm a little bit wary about this. I mean, if you look at the market today, there seems to be the markets are up, risk is on, and yet we do know that at this meeting, not every member voted for an interest rate cut. We did have 2 dissenters here. So there is the possibility here that the market might focus on that first of all in terms of a predictor. Maybe the minutes won't give the investor risk appetite what they really want this year. Remember, Powell did signal that the rate cut that we had before was not the start of a more progressive interest rate cutting cycle. It was perhaps one-off. And so I think there is the possibility that we might be quite disappointed overall by the signals that we get today.
Yeah, there's a lot of talk that the market will be disappointed whatever happens. But you referenced the dissents. Eric Rosengren and Esther George both dissented in the last meeting. How significant is that in that if there are others who are on the fence, it could sway Jay Powell in the end?
Well, it will, and obviously the economic data that we've had between then and now will also sway the economic data. For instance, if we look at that, we've had a bit of a mixed bag. And I think it's probably fair to say that the data, I would say, from Europe has been perhaps worse overall than the data from the US. The market has, I think this year, certainly from a foreign exchange point of view, been very much focused on the Fed, about the interest rate cuts that were going to go from the Fed, about the outlook for the US dollar. And actually, I think it's been the Eurozone economy and certain Asian economies that have been hit much harder by the global slowdown. So from that perspective, again, I think there is the possibility that the market, perhaps stirred up by comments from the president, has been perhaps putting a little bit too much on on emphasis about how much the Fed will do in the very short term. Now, when we get to next year, I do think that there is recessionary risk. I think the Fed can probably has a lot of space to accelerate the pace of interest rate cuts, and we do anticipate that there'll be quite a lot next year. But I think maybe the signals that we get this year...
If he just sounds dovish, right, without doing much, does that help? Because is it all just gaming dollar so that it doesn't rise too much?
Well, again, yes, but then we immediately come back into the currency war theme. So, for instance, if we look at other G10 central banks, in fact, if we look across global central banks, there's been a lot more that have been much more proactive in those terms than the Federal Reserve. So, for instance, if we look at the G10, we've had Australia, we've had New Zealand really getting in there and perhaps gaming their currency, if you like, by getting in a preemptive sense. So yes, it will have an impact, but coming up to the ECB meeting in September, I think the market's going to be very much focused on what the ECB actually does.